Righto, Money Miners, we're bloody... Mate, today is interesting and holy snap and duck shit, we got some late mail. We'll get into it. But the big story for today, prior to about 20 minutes ago, let's put it equal par. I reckon put it equal par. The battle, because it's a battle.
There's two hostile battles, yeah.
The battle for Robe Mesa.
Yes.
Like, mate, how good's that? Then that's the thing with these bulk tonnage operations. You can have companies battling over it. Whoever gets it, it doesn't matter. MMS get the contract. Because who else would you get to bloody do a bulk tonnage friggin' like? Well, look at what they can do, mate. 10-to-1 strip ratio. They can make that look 1-to-1, like if it's a gold one. So imagine what they can do in iron ore.
I don't know if there is anyone else you could trust.
No, I think it'd be minus 1-to-1. Like they.
If you take anything home, I reckon, Matty, from this episode, it's that MMS can do the job. That's all you need to remember from what we're going to talk about for the next hour.
And when you say job, JD, tech services, mining, execution, vertically integrated jobs, they're unreal.
All of it. Go MMS.
Right, so we've got the battle for Robe Mesa.
Yep.
We've got CZR, Fenix, Rio, mate. It is all happening. So, high 50s is the new 62. They've accepted it. Now, and I've got, what was that one I did? It was the tethered goat deal, wasn't it? When I did the Matty's friggin' maze of shit and I ended up at Creasy mining and...
Yes.
Oh,
doing
and,
director searches.
Matt Burney.
Yes,
It ended up at Bulls and Bears for the bloody... and Stewie McDonald used to be the secretary for Creasy. Anyway, I've got another one of them and this ends somewhere. And it is friggin' out there.
I'm curious what you've dug up, Matty.
But
there's another hostile bit. There's another hostile deal. It's just fresh off the press.
Funnily enough, come in at 5 minutes past 1.
We'll have to talk about it in a future episode.
But should we give the quick rundown?
Yeah, mate.
I've got screenshots. Once you've got screenshots, your life's good. Bloody, we've got Goldfields, non-binding indicative proposal to acquire Gold Road. So, look, I'm half wrong, half right in terms of, I said Gold Road's interesting, but I said Goldfields are that inactive in Australia, they won't do anything, so they've made me look stupid. But I look half stupid, half smart.
I'm sure you said this one once upon a time, Matty. Don't lose sleep over it.
I will find that somewhere.
There's a few very interesting parts of this deal.
Essentially they've given all cash scheme of arrangement, $3.05 for Gold Road, which is a 28% premium. It's been rejected by the Gold Road Board of Directors because they wanted, it appears that Gold Road wanted to instead buy the 50% of Gruyere off Goldfields.
Yep.
And Goldfields have formally responded to Gold Road, said it will not be progressing the alternative transaction.
So this is a bear hug, mate, because right now you've got the potential acquirer who's been rejected, revealing the deal. This is hostile. This is a hostile playbook.
And Goldfields said remember we said they'd end up with 4% of Northern Star effectively. Their intention was to distribute as part of the De Grey deal, which Gold Road have the stake in. They said they were going to distribute that to Gold Road shareholders as part of it. And like the wording here, price represents a significant premium of 28%, yada, yada, and all the other ones. These premia are even more significant when considering that Gold Road does not control either of its major interests. So what's...
Do you know what's interesting on this one is that what's not in the details today, but that's the fact that the Gruyere joint venture agreement includes within it a standstill which specifies that Goldfields cannot acquire any more shares in Gold Road. So what that standstill means in practice is that there was no avenue for, and Goldfields is went on the decline. They've wanted to consolidate Gruyere for a long time. If you go back through history, they expressed this. But the standstill meant that there was no way to actually getting that deal done unless it was friendly and agreed upon by Gold Road's board. And as we can see today, Gold Road's board has probably likely been pretty unreceptive to any suggestion of that historically. And now we're at a point today where Goldfields has decided to go for a different approach, and that's to go hostile, reveal their intentions, put Gold Road in play effectively. And I think it could get spicy from here.
Yeah, and it was interesting. They're saying they're knocking back the $3.05, but they're saying they were wanting the 50% out of Goldfields via potentially a capital raise and more debt.
Fascinating, hey?
So what's the...
You can't acquire us, we'll acquire you.
I'll be like, mate, just give me the money now. But anyway, so I think Gold Road... Well, the competition starts now, I assume, for Gold Road. But
Gold Road's in play.
If nothing happens, Gold Road shareholders would be pissed off.
Yeah. Well, this is this puts them firmly in play, and the board's going to have to if they want to defend their existence as a listed entity, they're going to have to put a pretty compelling case to shareholders as to why that should be.
Right.
I wouldn't say I wouldn't go as far to say they'd be pissed off, Matty, just on the fact that they're going to have a tick up. They've already had a bit of outperformance versus the pack on the back of the degrade deal and stuff. So they'll have a chance to sell out at a fairly decent price. It's not going to quite get to the bid, but it's more interesting than it kind of was a year ago. You know what I mean?
And this could be the first of several bids too.
Yeah, well,
exactly. That's what the market's going to anticipate for sure.
Or maybe the Agnico thing will happen now. That's what I've been working up to. All right, let's get into the Battle of Robe Mesa. But tell you what, bloody Comsec, if you're listening, this new watch list thing you're going on, fuck it off. I don't like it. Bloody, it come up this morning. I thought
I'm with you, Matty.
I couldn't
read the bloody thing.
I thought old gold stocks were flat because they're coming up at 0.01% change, zero. I'm like, this is a bloody absolute anomaly. Then flicked back to the other one, and it's like, that's correct. So give yourself an uppercut. I don't like the new watch list. I want it compressed so I can whiz through watch list because I do it 6,000 times a day when I'm trying not to do work.
Last bit of goss, Matty, before we get into the show. You can see in the consolidated watch list, the second one you've flicked up there. Look at the outlier. Bellevue down 10% plus, cancelled their roadshow over East, and word on the decline is that the MD has had to fly back to site. So
yeah, on very short notice. Yeah. So that was, I think it ended up about 11% down. So
yeah, a few question marks there, hey?
Yes. Well, that saves me talking about that later. Good work, JD. Righto, the battle for Robe Mesa.
Mate,
let's go.
Forget the battle for Leonora. Forget the battle for Sierra Rutile. There's a new hostile deal for us to sink our teeth into, and that's before the battle for Gruyere, which I'm sure we'll become obsessed with as well. This is the battle for Robe Mesa, and I can't believe that we've got another kind of hostile asset deal. I actually thought St. Barb's was a bit of an anomaly for a long time, but we're here again, and it's awesome. I'm excited. The asset of interest is CZR's Robe Mesa iron ore project in the Pilbara. And who are the parties that, have been trying to get their hands on it? There's actually 4 different parties now at various points in time. Miracle Iron, Fenix, Golden Valley, and very recently a consortium led by Rio Tinto, including Mitsui and Nippon Steel. JD, I think we need a bit of background on CZR to set the scene here.
Mate, it has been a long time brewing. I think we spoke about it back when that very first deal was announced, but I'll give a bit of 101 on CZR because I don't think it'll be familiar to everyone. So it's a Mark Creasy company. He owns about 52% of the business, and we're talking about the West Pilbara here. So they're kind of within kicking distance of Rio and some of their projects there out near Panawanika, and then you've got MinRes not too far as well. So these guys own 85% of Robe Mesa's deposit, which they call the broader Yarraloola project. So that sort of project includes the port and everything else that goes with it. You've also got that other 15% interest. Now, that is directly held by a Creasy entity called Xanth, which we'll speak about a bit later on. DFS came out for this one in 2023, so it sort of showed a project that would scale from 3.5 million tonnes per annum up to 5 over an 8-year life. And the product, it's not top quality like most of the kind of projects we've spoken about lately. It's on par with Rio's Robe Valley fines or FMG's super special fines. So we're talking a 20% plus discount to benchmark. The project's got like an NPV of 250-ish million if you're plugging in a $90 rather benchmark price. And logistically, we're talking about a kind of similar type thing to Mins, where they would truck the ore out to Ashburton. From there, they've got this Ashburton link, which is co-owned with Miracle Iron, that group you mentioned before, Trav. There's a transhipper there that takes it out to a bigger boat, essentially. That's not yet built. That would be built in 2026 prior to all this sort of stuff unfolding and operational in 27. So the project's pretty kind of small beer in the scheme of the Pilbara, but it could make a bit of cash if the iron ore price holds up. And last thing to note on the company itself is there's a bunch of other tenements in there, as there tends to be. A few of them are a bit more interesting than others, namely the sort of gold one in and around Hemi is the one that kind of stands out there.
Funny, on that product spec and the discount and everything, I don't know if I mentioned it, but apparently like a week or so ago, Rio were actually having a strategic review thing about the product specs where, because SP10 before, the 58, they just sort of wasn't that strict on grade. They threw whatever in there. But apparently like SP10 is going to be like a more stricter product, and then there's going to be another product below that all the shitter stuff goes into. So it's like SP10 is going to possibly become the Pilbara blend equivalent because of the declining grades and everything. So how this all fits in, I don't know, but that's where we're heading. High 50s, I think.
Yeah. There's a higher grade sort of part of this one, the bulk of it, and then even lower. And they talk about sort of blending at kind of near the mine rather than at port, but that's all up in the air at the minute.
Tell us about the deal, or the deals are.
The deals. So the deals start back in the beginning of 2024, lads. So they entered an agreement in January 2024 to sell their 85% interest in Robe Mesa for $102 million. Now, that was to Miracle Iron. This is ultimately a Chinese-owned group. We're talking about an asset sale. So CZR would get cash and they would maintain their exploration projects. That equates to 43 cents per share, the $102 million. So it's not a bad amount of money, especially relative to the bids we're going to talk about today. And most of that would be paid on completion and the rest of it by mid-2025. Now, obviously, you need approvals, and the key ones here were Chinese and, more importantly, FIRB approval. And simultaneous to this agreement, Creasy was in talks to sell his 15% interest to Miracle Iron as well. And all in the same week, those guys agreed a deal to buy East Paulsens from a group called Strike Resources. So that one cost them $20 million. And why that's kind of important is because those guys are the co-owners of that export facility, and they were going to kind of both truck their ore to a kind of middle point between the two projects and then together truck it out to the port. So they were going to kind of share logistics, and both being announced sort of 4th and 11th of January. The Miracle Iron deal for East Paulsens ends up wrapping up in March, but as we know, the CZR deal didn't quite get that far. So shareholder approval came pretty quickly. They got that in Feb, but by the end of May, they get the first of what's ultimately a bunch of delays from FIRB. So FIRB's not saying no, they're just saying we need another month. We need another month, and then again, we need another month.
We know that it actually is no without saying no.
Yeah. I mean, credit to FIRB and the Australian government. This is the way you do it when you don't want to kind of cause a big political scene, a diplomatic sort of argy-bargy with the Chinese, obviously our biggest trading partner. So it's much more sort of kosher just to say, no, we're going to keep reviewing this, rather than say, nah, this isn't happening at all. Essentially, that is what they were saying, though. In
the case of this one, part of the no, might have actually just been in relation to the port asset, which would ultimately become under control of Miracle Iron at that point in time, which had an allowance of 5 million tonnes per annum. And you think of port assets maybe a bit differently to a small scale iron ore asset.
For sure. We know there was a deal in the Northern Territory a while ago, not mining related, but over a port that became sort of Chinese owned, that was hugely controversial. So every part of it was sort of important. And on the Chinese side of it, they gave approvals kind of mid-year roughly, but we saw those FIRB ones keep rolling on. And this went on for ages. So you ultimately get to 2025 this year, Feb 25th. And this was a big day. Heaps of announcements came out. I think it was 7 all up. The company first says the deal has been terminated with Miracle Iron. FIRB clearly wasn't going to provide approval, as you can see in the announcement here. And then you get Fenix, a sort of small-scale iron ore miner who've got operations closer to Geraldton, come up with an agreed scrip deal with CZR. And they're going to be paying 0.85 Fenix shares for every CZR share, which kind of implies a 26-cent value on the day of the deal, or in equity value terms, $61 million we're talking about. But there was room for this to increase should they come in quickly. So should they come in the space of about 4 weeks, that is the CZR shareholders, and agree to this to a point where 75% have locked in, they're going to get an implied 30-cent value, which is about $71 million. CZR directors back the deal, and Creasy, it's said in the announcement, is intending to accept, absent, of course, a better proposal. There's a $650,000 break fee, matching rights, and all the rest of it, as you'd kind of expect. And also, Fenix served up a loan to CZR. So CZR, being pretty short on cash, needed a bit of money, and that would tide them over just working capital and the like. So before the deal, you'd seen some kind of interesting share price movements, to kind of say the least. And you can see in the day before and the day before that, the stock ticks up 18 and 23%. So CZR gets served up with a please explain notice, which you would expect they sort of customarily bounced back and said, we knew nothing of the sort, nothing got leaked. But clearly lots was happening at CZR. And this is only really the start of it, because you get a heap of announcements over the next kind of month. So March 18th, Fenix are now 6% shareholders in CZR. And obviously you've got that huge Creasy stake. That's super important. 52% of the company can swing it either way. And obviously he's going to wait to the end. And there's also likely friends or people just playing off the back of what Creasy's going to do that could pretty quickly swing that up to 75%, getting over the line should they accept. But on the 20th, you get another offer that comes out. So Gold Valley, again, Chinese-owned group, put forward an offer.
They export some iron ore out of the Midwest-ish region, I think, via Esperance, or they wanted to pick up some Esperance allocation or something like that, I think.
Yeah, that's right. They send stuff down on the train from Cow. I think they truck it to Cow and send it out that way. So they're kind of in the iron ore game, but this is quite different. And their pitch is conditional on 2 points. So firstly, funding, and secondly, the termination of the bid implementation agreement with Fenix. So it's not really a fully baked offer just yet, but Gold Valley offered to pay $2.5 million should they fail to put forward a binding offer. And that would be kind of in line with 31 cents a share. So just trying to edge out Fenix. And this one would be for the entire company, just like Fenix was. But straight away, CZR said this one's not superior and they're not really interested in it, really on the back of it being conditional funding, non-binding, and less certainty. They
don't even have to say that it's not superior. They just have to say that it's an offer not capable of becoming a superior offer at that point in time, which, given the conditionality, is a somewhat simple one to knock back. I mean, it's a bit of a harder thing to muster to know if you've got certainty on the funding capability versus what ultimately comes next, which is an offer from a Rio Tinto consortium.
This is it. Now, this is where it gets super, super juicy, right? So you come to the 21st of March. This is the day that shareholders had to approve over that 75% level if they wanted that kicker. And it is revealed that we've got a third group keen on Robe Mesa. So in steps the Rio Tinto-led consortium, and things get super, super juicy.
Yeah, and like you mentioned, like if the asset Robe Mesa sounds familiar, it's because Rio Tinto has a mine of a similar name. They've got Robe Valley just down the road, which includes the Mesa A mine as it currently stands, and the consortium with the ownership in that Robe Valley kind of area includes Rio Tinto, Mitsui, and Nippon Steel. So Rio Tinto and the Japanese kind of groups there. That consortium put forward a competing proposal to CZR on Thursday evening last week. So that's Thursday, the 20th of March. The consortium is only interested in the iron ore deposit this time, which makes sense given synergies with their own Robe River down the road. So their proposal that is put forward is for $75 million cash. They articulate their various conditions too, which, as I'll get to, actually matters quite a bit. But firstly, notice the date. They submit the bid, Thursday, 20th of March. Remember, the Fenix offer included that 4 cents per share kicker if they got to 75% acceptances by 7 p.m. Friday the 21st. So 24 hours to spare, Rio throws their bid into the mix, and as later comes out, Fenix actually got to about 14% acceptances by the 21st of March deadline to warrant the kicker, which at face value probably seems a long way off actually getting that uplift that would be warranted if they got 75% acceptances. But there's a very big swing vote in the mix there, being Creasy with 52%. 52 plus 14 is 66%. If Creasy had some friends on the register holding out to the 11th hour with him, that could have easily been another 9% to reach the 75% threshold. But this Rio bid is a spanner in the works. And because now, instead of accepting into the Fenix offer, Creasy has to very quickly determine if the Rio bid is an offer capable of becoming a superior proposal. And if it is, then it opens up the ability for the Rio consortium to conduct due diligence.
So it's up to the board then. Let's run us through what happens from there, mate.
The board makes up their mind very quickly here. The very next morning, the board says the Rio offer is a proposal that could reasonably be expected to lead to a superior proposal. So the fiduciary out applies. Side note, imagine if St. Barbara board had been so accommodating to a competing proposal when it came to the sale of the Leonora assets.
Is it a competing proposal because it's Rio, they got heaps of money, potentially?
To be clear at this point, CZR's board is still recommending the Fenix offer, but clearly, Rio's going to get the ability to conduct the diligence they need to firm up the proposal and reduce the conditionality. And Fenix actually has a matching right if they do, but Rio actually had a bit of a fuck up in their first proposal they sent to CZR. And this gets into the weeds a little bit, but I'm just going to bring it up here. Look at the conditions that Rio put to CZR. And I mean, specifically look at conditions number 4 and number 6. Number 4 is conditional on the successful negotiation of an asset sale from Xanth Pty Ltd for the part of the project that they own. And remember, Creasy owns 15% of Robe Mesa in a separate vehicle, which is called Xanth, right? And then condition number 6, CZR obtaining shareholder approval for the purposes of ASX listing rule 11.2. That ASX listing rule pertains to when a company is disposing of their main undertaking. Effectively, shareholders have to vote that that's okay. And that's all fine and dandy to have a shareholder vote on that. But their other condition is that Creasy agrees on a deal with his other 15% of the project directly too. And that's the problem, because Creasy would be explicitly excluded from the ability to vote in the shareholder vote under 11.2 if he had some other interest in the transaction. And given Rio want to make their offer conditional on such interest in the transaction via Xanth, Creasy would actually be unable to vote any of his 52% interest in the shareholder vote, which kind of blows the certainty of any deal with Rio wide open at that point.
Yeah, right. So did they realise this?
They absolutely did. We learned from CZR's announcement today that the very next day, CZR received a revised MBAO from Rio, which removed that condition explicitly. I suspect someone pointed out the key issue and they probably felt a bit embarrassed. Nonetheless, that's where we're at today. CZR has relied on their fiduciary exceptions to negotiate with Rio or provide access to the data room. And, if and when Rio puts forward an actual superior proposal capable of acceptance and the board supports it, then, Fenix has the right to match it. But remember, Fenix's bid is a scrip offer. Do they really want to get into a bidding war, with the people who have rail synergies? I don't think so.
All right, so we should kind of talk about what ultimately happens then if the CZR board ends up recommending the Rio offer. What is the path down that road?
At the end of the day, we can talk about shareholders voting a certain way or not, but the only vote that actually matters in this deal is that of Creasy's. Creasy owns 52% of CZR. That vote controls the outcome, no matter which way you cut it. So it comes down to what Creasy wants. Does Creasy want to convert his stock into a more liquid Fenix, or does he want CZR to become a bit of a cash box so that he can use it to buy something else? I don't know the answer to that, but I will point out a couple of things quickly. Number one, if CZR goes with the Rio offer, there would probably be some chunky tax considerations involved if they go to distribute any of that cash to shareholders. Number two, I doubt CZR would have even let Rio in the door if Creasy wasn't already thinking this is probably the deal that I want anyway. So my prediction is the Rio consortium is going to end up with Robe Mesa, and CZR will sort of emerge a bit of a cash box. Fenix will probably continue to do more deals, just not this one. I've very quickly banged up this table which compares the various offers over time received by CZR, and while it's not capturing tax implications, it's kind of clear from this table that Rio's bid is pretty compelling versus the Fenix offer at this stage, not just because the consideration per share is higher pre-tax, but because it's only for Robe Mesa. And to the extent CZR think they can get some value from their kind of Ashburton Port allocation and their gold and other tenements in the portfolio, then they can do a subsequent deal to get value for that or whatnot. So it certainly kind of appears at this point in time that Rio's got a pretty compelling position to trump Fenix on this one.
Yeah, and they've obviously just got way more capacity to pay more, not just because they've got way deeper pockets, and added to that, they're pretty keen, it seems, to add tons, right? But the economics just stack up way better for them. So I think that leaves the outcome relatively set. But yeah, like you said, mate, it's not super straightforward, and it really comes down to just what one person wants at the end of the day.
That's
reminder on the process: if Rio put a bid in, Fenix have the matching right. If they match it, can Rio come over the top again?
Fenix can either match it or go higher, and then it's still open at that point. They'll bid up.
Keep rolling.
Yeah.
Oh Jesus Christ! David versus
juicy.
Goliath.
Yeah.
Go on, David.
I wonder who'll win that one. we should chuck up these photos just to really stress. You can see on the maps here, right? And that last image, this literally, like you said, Trevor, butts with Mesa F. Like, it is the same ore body. The economics are pretty compelling from Rio's perspective. But on the other hand, they don't need to mine it right now. So you're potentially paying up for something you wouldn't really want to mine next year or the year after or the year after that necessarily. So I think they would have ideally just been able to scoop this one up right when they needed it, but that's not how it's kind of played out.
Fuck, geez, aren't Rio getting bloody active on iron ore? Far out. They're bloody... Don't see BHP popping up on any iron ore deals at the moment.
No, you don't.
A bit smaller, but...
Yeah, I mean, it's interesting. And we saw Fortescue as well, right? Not too long ago. So it's juicy. But yeah, I think Rio's iron ore team will be purely focused on Simandou right now. And that's going to be all that matters for the next couple of years, getting that right.
Yes, very good, boys. Very good. I haven't got any notifications from the Bloomberg terminal or anything that Swick's hit 18 million drill meters. Nothing's come through yet. Still.
Yet.
They just keep their heads down and do the work, though, don't they?
Mate, they might just pop up with 19. They might just skip the 18 announcement.
I could see that feat like reasonably happening. You don't need to keep kind of checks of every single meter when you're that good. You just get on with it.
Well, what's probably going to with Deepex punching the 2,000 metre holes, they'll probably do a heap at the same time and they'll skip a number when the shifts finish. So, mate, the household name in underground diamond drilling, the short, mid to sort of long holes with Swick and the real bloody long holes with Deepex, 2,000 plus metres. The closer you drill to the centre of the earth, the closer you are to the bloody lava that's coming up depositing minerals. Drill deep and find a mother lode. Who cares if you can mine it or not?
Swick and Deepex.
Go 3,000. Oh, love it. Right. This is, I don't know what to say about this. This is, you're going to be proud of me.
I don't know where you've gone with this. I know we're talking about Cyprium and a non-core asset deal. Enlighten us.
Just popped up today. Cyprium, divestment of non-core Q project, binding sale and purchase agreement with Q Resources Proprietary Limited. So I'm thinking, right, public selling to private. I'm like, okay, what's going on here? 75 grand. I'm like, geez, in this bloody market, I'm like, 75 grand's cheap. And bloody Cyprium get a 1% net smelter royalty. QR, which is Q Resources, can purchase half the royalty back for $500,000, and Cyprium will receive 9.9% of shares when QR publicly lists. So I'm like, okay, let's just do a bit of digging here. Courtesy of our friends at ASIC, all these company extracts you can get for a small fee. This is sort of $50 well spent. This. Q,
so what'd you find out, mate? Who are the directors?
Who the hell's
at
Q Resources? The registration date for Q Resources was 5th of March. So this Q Resources was created a couple of weeks ago. located in Maylands, the office holders, Keely Maitland and Peter Richard Van Lute. And you'll see if you look at Cyprium, Peter Van Lute is the chief geologist who is the office holder of this Q Resources and the secretary. And then you also look at the members of Q Resources, PVL Consulting. So I assume that's Peter Van Lute and Xavier Group. I'm like, okay, who the hell's Xavier Group? In Paddington, New South Wales. Good pub there, the Paddington. I think it's the Royal in Paddington, in the eastern suburbs of Sydney. God's country. You look at currently Cyprium's senior advisor and previous chief operating officer, Milan Jurkovic, is also the principal of Xavier Group, which is obviously a shareholder in this Q Resources that this asset's gone to. And then if you look at, okay, who's in this? Who's in this Xavier Group? Current and historical company extract for Xavier Group. You've got Michael George Gibson and Milan Jurkovic. So Milan is currently the advisor to Cyprium, and I think there was when they announced that is, the goal to return shareholder value for Cyprium. And so Michael George Gibson, he is also executive director at Link Minerals. And Link Minerals is like, I think the previous name or the entity it trades under is Xavier Link, there's obviously Xavier Group, which Milan's in. You look at the executive chair of Link Minerals, Clive Donner. Clive Donner was the managing director of Cyprium for 6 months when they did the recap and then left in February after that with a bit of cash. And so it just appears they've sold the asset to themselves.
It's a different. So this is the non-core. This is the non-nifty part of Cyprium's portfolio.
Yeah.
Yeah. Do you think, reading between the lines, are you thinking what I'm thinking?
I don't know what I'm thinking. I don't know.
I think there's a deal with Appian next for Nifty.
Yeah.
I think Cyprium gets gobbled up by Appian.
Yeah.
And this is like the prerequisite to that.
The maze that ended somewhere.
Interesting, mate. Very, very interesting. Unfortunately, with these ones, you end up headbutting against the wall because you've got so many more questions. But I think, like you said, Trav, that a few of those questions might go unanswered, at least for the foreseeable. Maybe we'll see it listed as a public company one day and it'll all come out.
Yeah, pretty much. So anyway, that's about it. I don't think we need around the grounds. I was going to, mate, the amount of freaking gold exploration announcements this morning, they were freaking everywhere. And just it's bloody, between rock chips, drill holes, just like
it's funny what a record price does in a commodity to exploration companies.
Oh, mate, even exploration companies finally progressing towards studies that have been not doing that for ages. Like, it's just, mate, it's frigging going off its head. So we'll wait to see what happens.
Beautiful.
Go Trump.
Yeah, mate. I mean, it seems the big companies aren't thinking all too differently from the small companies, getting hungry on M&A as well, right?
So, right, thanks to all the partners, as always. AusIMM Underground Operates tickets and GRX tickets, cheap as chips, going out the door. Links in the show notes for the discount. Thanks to all the partners, MMS, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, WA Waterbores, Sweet, Metro Project Engineering, and Cross Boundary Energy. Hootaroo.
Hootaroo.
Hootaroo, guys.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.